Hey, Mr. Eichel, thank you so much for joining us.
Always good to be with you, Larry.
So the report that we're talking about today is a follow-up to a report Pew issued 2 years ago. Can you tell us a little bit about that report and then how this report builds on that work?
Yeah, I mean, actually, that report was out last year.
Last year.
And it was kind of a progress report on how the city was doing coming out of the pandemic. And we looked at that question in a number of ways, looking at the number of jobs in the city, the question of remote and hybrid work, the housing market, the types of jobs that were coming back and not coming back, all those sorts of things. And we just thought, almost a year later, that it was a good idea, especially given the timing that we're in. We're going to have a new mayor soon, that we take another look at it and see how things are updated, see how the city has been doing, whether it's getting closer to full recovery, whether that recovery is, and what we can say about that recovery and its nature.
One of the key points that you talked about in the report is employment. Has getting back to pre-pandemic levels of employment been a struggle here in Philadelphia, or are we on a track that gets us closer to that?
Well, we're certainly on a positive track. I mean, in 2022, the city gained a lot of jobs. I mean, depending on what kind of time period you look at it, 30,000 more or less, and obviously that was positive. Of course, that was happening all over the country as well. We looked at it sort of at the end of the third quarter, that is through end of September. And at that point, the city was still down about 4%, which is 30,000 jobs more or less from where it had been before the pandemic. Now, by way of comparison, the rest of the country and the country as a whole and the rest of the region were almost back to where they'd been. They were, within a fraction of a percentage point of where they had been in 2019. So the city's coming back, but it's coming back much more slowly than the rest of the region and more slowly than the country as a whole. And interestingly, we're certainly not alone in that regard. If you compare us to some of the other big East Coast cities, particularly New York and Washington, we look pretty much the same. And we did anyway after the third quarter, down about 4% in terms of jobs in the city, down less than that in the surrounding suburbs. In fact, our suburbs seem to be doing better than the suburbs of some of those other regions. I can't tell you why that is. I've heard a lot of theories about it. The major East Coast cities are quite dense. They're denser than cities in some of the other parts of the country. So that in the early stages of the pandemic, that might have been a factor in people wanting to leave or business wanting to close. The East Coast cities tended to take the pandemic more seriously in terms of restrictions. That may be a factor. I mean, I don't think anyone knows for sure. There is some more recent data that is not final data, but through the end of the year, and the city, like the rest of the country, had a pretty good fourth quarter. So if you look at the fourth quarter, we're only down, say, 2.5% from where we were 4 years ago, rather than over 4%. And but the nation now is now over the number where it was in 2029, fully recovered and then some. But we still see that gap of 3 or 4 percentage points between how we're doing, how the rest of the region is doing, and how the country is doing. That has been a relatively permanent fixture throughout the last 2.5 years.
So pre-pandemic to now, it doesn't seem like the industries that make up Philadelphia's economy have changed as much in terms of the overall number in the workforce and what percentage they make into our economy. Did that surprise you at all?
Well, I don't know whether it surprises me in the Great Recession of 2007, 8 into 9. We actually did, initially we did less poorly than the rest of the country, and then had a relatively slow recovery, and had been doing better than the rest of the country in terms of jobs. Not a lot better, but a little better than the rest of the country in the immediate pre-pandemic period. So this pattern is a little different.
One of the other things that the report touches on is office space usage and commuting and whether or not people are going back to work in person. Now, I think office space usage in Center City is about 50% of what it was prior to the pandemic for commercial office spaces. The industries that rely on people working in the city and things like SEPTA and all this, how are they adjusting to this trend and can they adjust?
I think it's a real challenge. As we note in the report, SEPTA is in their December traffic report said that the system ridership was at 52% of pre-pandemic levels and regional rail was at 46%. And their office occupancy is a tough thing to measure. The Center City District had a report that came out in late in the fall that said about 50% it was about 50% occupancy. Then they came out with some other numbers more recently that are a little different from that. We have numbers for the region that put it at 42%. We don't, like I say, it's something that no one ever thought of measuring before. So the measurements now are sort of a work in progress, but it does have big implications for the city. It has implications in terms of wage taxes, although it's a very complicated topic. And there are other tax revenues that workers generate through their purchases when they're in the city, particularly when these are suburbanites, who, if they stay home, aren't making purchases in the city. And this affects the survival of the service businesses that depend on the presence of those workers and the people who rely on the jobs in those businesses to support their own families. Long term, it's a really interesting question. If hybrid work is going to be the model long term for office workers, obviously this is not for everybody. There's still a lot of jobs that require people to be there. But for office workers who can do their jobs from home, if sort of a hybrid model kicks in and the expectation is you're going to be in your office 2 or 3 days a week and not on Monday and Friday or whatever, businesses are going to look at all the office space they have and think, we don't need all the space we have now. And they're going to want to take less space. This is going to develop slowly over time because office leases tend to be quite long. And the vast majority of them have not come up since the pandemic, but obviously they will. And if there is a lessened demand for office space, that is going to have a number of implications, including for city property taxes in a roundabout way. That is, the property tax the city collects from from an office building. It is based on the income the office building generates through the rents it charges its tenants. And if those rents decline, or even if they simply don't rise over time, if there's less in demand for that office space, the value of the buildings from a tax standpoint is going to go down, and the tax collections from the buildings are going to go down. Now, I mean, there's no way of knowing how big an issue that's going to be over time, but it's something that city officials are certainly aware of and are watching, and is a concern.
And in that vein, another area that the report touches on is housing prices. And this has been a huge issue in the city because we've seen these reassessments go very high. But what are we seeing right now?
Yeah, I mean, there was, in the first year or two after the pandemic, prices went way up. Partially because interest rates were still very low, and also because there just wasn't that much on the market. People were staying put. Now, in the last 6 months and more, things have really cooled off, and that probably has a lot to do with mortgage rates. But housing prices actually declined in the second half of 2022, and rents have at least stabilized as well. They were going up pretty substantially as well. So, we'll see how long this lasts. I know the trends in the housing market during the pandemic have elevated a lot of concerns that some people have about the city becoming unaffordable for some residents. As I say, things are moderating, and we'll see how long that lasts.
And how do all these things put together affect city revenues?
Well, the interesting thing is that city revenues through the past fiscal year, which ended June the 30th of 2022, have been really strong. I think surprisingly strong. There was a huge increase. The city ended the year with a fund balance of $775 million, which is a very large figure, even in a budget that is in excess of $5 billion. It's a big number. The business and income and receipts tax, which is the main tax on businesses in the city, that was up quite a bit, and the wage tax was up by a large amount too. Although when you compare it to the sort of pre-pandemic number, it's up less than sort of inflation over that period, but it rebounded quite substantially in the past year. The city also, as you know, has benefited from an influx of the federal funds through the American Recovery Program, $1.4 billion they got in 2021 and 22, which has to be committed by the end of next year for use, and that certainly helped. But for now, the city budget is in pretty good shape.
All right, I'd like to bring Denise Clay Murray here on For the Left of My Mind.
Thank you, Larry, and thank you for spending some time with us today, Mr. Eichel. I really appreciate it. You mentioned office space and the fact that because people aren't going into the office, you have all of this unused space. What do you think ultimately happens with that? I mean, I know that the leases haven't expired for a lot of these places, but I myself am recovering from my second bout of COVID. So we're going through a second round with this disease. How will that impact things?
Yeah, I mean, let me talk about the office space anyway. The the question with the office space is whether it can be used for other. I mean, there's some question about how quickly any changes should be made, because some people are still expecting that we'll see more and more people coming back to work over time, and maybe the lessened demand for office space will not be too big. We'll see. But assuming that it's substantial, then the question is, what else can you do with the space? And some of the older buildings in particular may lend themselves to conversion to residential use. There are issues with that in terms of cost, in terms of zoning rules, and obviously there's the question of whether there is demand for it, but that's certainly a possibility. Some of the newer office buildings, which presumably would be the last ones that anyone would think about converting, are harder to convert because a lot of them tend to be bigger and have a sort of central core of elevators and other functions in the middle that just make it sort of hard to figure out how you would create apartments out of all those spaces. But certainly conversion to residential is something we'll see. I think we'll see if it plays out this way. But it's going to take time, and there will be obstacles to it, and there'll have to be a lot of city will have to be flexible about what do you do with this space if you don't need it anymore. And as I say, there are some people who would argue you ought to kind of go very cautiously here, because if things change and the city grows and so on, you may need want that office space again.
Okay. Now, you also mentioned that there was more, well, what I'm seeing is there's more housing construction going on. Apartment buildings are going up and different things. Do you think that this will have any kind of impact on the affordability issues? Because a lot of these apartment buildings are high end.
Yeah, that's a really interesting question. A lot of them are high end. There are some economists who would argue that just building any amount of housing, regardless of the price point, it is good for the market for everybody. On the theory that even if there's new high-end housing that comes along, that will push the prices down of the housing that's not new and not so fancy, and will benefit everyone. I'm not sure that's true. I've heard that argument made. We'll see. But the city obviously has a lot of people who are spending a large amount of their income on housing, a larger amount than the experts say is healthy. We at Pew have done some analysis of this, and it's really more an income problem than a housing cost problem. It's not that housing here is more expensive than in a lot of other places. In fact, it's not compared to the other big cities on the East Coast. It's just that we have a lot of people with low incomes, and they cannot afford what's out there, and that is a huge structural problem for the city that kind of goes beyond what's being built now. Another thing about all the housing that's being built now, as I'm sure your viewers know, that the city for many years had a 10-year abatement on new residential construction that was modified recently, and it phased out at the end of 2021 and was replaced by a new abatement that was basically half as generous as the first one was. And as a result of that, a lot of developers got their projects on the books before the end of 2021, and many of them started building last year. So there's a lot of housing coming into the market or in construction now. For that reason, the number of permits that were issued last year was quite a bit lower than the year before, reflecting that change in the law. Obviously there's a question too of whether there's going to be demand, whether there's going to be people to fill all these units. Philadelphia, before the pandemic, had been gaining population fairly steadily for nearly 15 years after decades of population decline. The first post-pandemic population numbers from the census, which took us through the middle of 2021, showed that we lost about 25,000 people in the first year of the pandemic, which is a fairly substantial number. We're going to, next month, we're going to get the numbers for the second year of the pandemic from July 1st, 2021 to June 30th, 2022. And that will really tell us something of whether that initial sort of loss of population was just sort of a immediate reaction to the pandemic, whether people came back, whether new people have come in, whether things have stabilized, whether the city maybe is growing again, or whether it's continuing to contract. And I think that will tell us a lot about whether there are going to be people to fill that new housing construction, and whether they're going to be people to fill jobs and by their presence to generate jobs, to expand the economy. That's an important number, and I say it'll be out in a few weeks.
Okay. Well, thank you. And I'm going to give you back to my co-host, Lawrence McGlynn, and you're listening to Hall Monitor on WPPM 106.5.
Thank you, Denise. And Mr. Eichel, thank you so much as always for coming on and joining us.
Anytime. Obviously, we enjoy talking about our work. We think it's stuff that people ought to know about.
Yeah, it's absolutely very important and very interesting. And I think the takeaway here is some good things are happening. It's just a matter of what keeps happening as we go on, and then what decisions are made to keep those things happening. I think but we're in a decent spot right now, it seems like, better than we could have expected, maybe.
Well, yeah, I mean, we're certainly heading in the right direction. I think generally the recovery nationally has been faster than people might have initially expected. The city's in a healthy place in terms of its budget. Again, partially because of relatively strong revenues, the federal money, and a question for another day, which is all the vacancies in city government. The labor market has clearly changed in ways as a result of the pandemic, ways that we don't fully understand yet. But one of the impacts of that, evidence of that change, has been the difficulty that the city's having in hiring people, which is, there are a number of factors that play into that, but that's one of the reasons why the city budget looks relatively healthy. They haven't been able to fill a lot of positions.
All right. Well, thank you so much as always for joining us.
You're very welcome.